So we're having a look now at exercise 15, elements in the income statement. And what we're doing here is classifying these transactions. And it's very important to get these classifications correct so that we can put those transactions under their correct classifications when we construct the income statement. So let's have a look at this. First up, we've got one already done for us. Cash sales for carpet. This business, we are an owner-manager of a sole trader, a business that retails in furniture and carpet as well as providing installation services. This business also receives commissions for selling various products. So that's the scenario. We're selling furniture and carpet, also providing installation services, and we get some sales commission. So the first one, cash sales for carpet, revenue, it's a revenue account, and that would be under sales. Cash, we might, revenue, sales, cash sales. Who puts it like that? There we are, fix that one up. Revenue, cash sales, that's how we find it. The next one, telephone bill. So it's not specifically allocated to sales, it's general admin. So it would be an expense, and it would be under admin expenses, and the account would be telephone expenses. Petrol for delivery vehicle. So because it's the delivery vehicle, we are delivering products, it's part of the sales, it's obviously going to be an expense. So it would be an expense under selling, and the account would be delivery vehicle expenses. Next, we're buying carpet. Remember, this is our stock in trade. So if we're buying carpet, this would be part of our goods in, part of our cost of goods sold, and it would be our purchases. There it is. Now it's an expense because it's either a revenue or an expense, and but it's under the COGS, and it's under the purchase account. The next one, cartage on sale. So we sell some products, and this is the freight or the cartage delivery expenses. Obviously, money's going out, and we put that under selling, and it's cartage out. The next, we've got wages to staff, sales staff. So obviously, money's going out. There's an expense involved. This one, it's under the selling expenses, in particular, sales wages. Next, the delivery van is serviced. Again, it's the delivery van. So this is all part of your sales expenses. Money's going out in expense. Under selling, you'll have delivery van expenses. Before, up here we had delivery vehicle, it's the same thing. Customs duty on Italian furniture. So we are a purveyor of furniture, in this instance some nice Italian furniture. We are importing it from Italy. And we have to pay some customs duty. So there's an expense involved, and these expenses are to do with getting those goods in and ready for sale. It's purchases, and under that part of the COGS, we have customs duty. Next is rent on premise. Obviously, money's going out for rent expense, part of general admin, and we'll just call that a rent expense. Discounts given to customers. So when we sell to customers, we may give them a discount for whatever reason. Oftentimes we might put it on account. It's a credit sale, but if they pay that account within, say, 1 week or 10 days, we may give them a discount. And so this is a revenue, and but it's that money we never got. So it's a discount allowed. It's a deduction from the sales. It comes under the sales, under revenue, sales. It's a discount allowed. Eagle Public Liability Insurance. We're buying insurance for the players. It's your general admin. It's an expense, and there it is. Office staff wages. So it's not sales staff, office staff. So it's general expense. So therefore it's going to be an admin expense, and it will be, the account will be office wages. There it is. Carpet sold on credit to customers. So it's a sale, it's a credit sale, it's revenue. There it is, revenue, credit sales. Delivery vehicles are depreciated. Again, the delivery vehicles, it's going to be a selling expense. This one will be part of depreciation. You'll have one depreciation account, and all your depreciations will go through that depreciation expense account. In this instance, it's for delivery vehicle. Now, you might have a depreciation account under admin as well, if depreciating non-current admin assets. This one is depreciation on sales vehicles and non-current assets that are to do with sales. Commissions received. So we receive some commissions. We may be selling furniture on consignment, and so we're going to receive some revenue. Other operating revenues, commissions received. Interest on loan with the bank. Now, we're not putting our interest on loan, but we have a loan with the bank, and we're getting charged interest on that loan. Okay, so that's going to be money going out. It's an expense. It's a finance expense, part of the cost of financing our non-current assets. It's an interest expense. Sales commissions to staff. So this will be for the sales staff. So it'll be an expense, underselling, and it's going to be commissions. Packaging of furniture sold. Sold. Make sure it doesn't get damaged on delivery. It's part of an expense, and it's part of the sales expense, okay? Because we're still delivering these products here. It's all to do with sales, not general admin, but sales. Underselling, we'll have packaging expense. Bank charges on checks. Checks is a form of transferring money, and the banks charge you for that. So it'll be a finance expense under the heading of finance, under operating expenses, bank fee. As with other bank fees, you might have monthly account keeping fees, lump them all together under bank fees. I like this one. You go to Sydney to buy inventory. Not to live it up and ham it up in North Sydney or down the rocks or wherever you like to go, but going to Sydney to buy inventory. Love it. So this is part of an expense. This is your COGS. This is your buying expenses. If you wondered what they were, we want to purchase some goods, and this is all part of getting those goods in and getting them ready for sale. So it's part of your COGS. In this case, we'll call it buying expenses. Love going to Sydney. Whatever excuse you can get, go. You return damaged inventory to supplier. So we've got inventory. We've made a purchase, but some of it's damaged, so we're going to return those. So this was part of your COGS. We had purchases. Money paid out for purchases. So it's an expense, kind of a negative expense in a sense, because we might get money back, or we just don't pay the account. Under your COGS, you'll have purchases and then less purchase returns. Accountant's fees, got to pay your accountants. Pay them heaps, they're worth it. General admin expense, there it is, accountant's fees. A customer returns damaged furniture. We make a sale, now we're going to have a sales return. It's actually under revenue, okay, up the top there. It's a sales return. Sales less sales returns. You receive a discount on purchases. We make a purchase, this is part of our COGS, and we might get it on credit, and then we pay early and we get a discount for paying early. So those COGS are expenses, and there it is under COGS, purchases less discounts received on those purchases. Channel 10, account payable. What's this Channel 10 account? Well, we are advertising with Channel 10. That's part of your selling expenses, advertising underneath selling. Stationery used by sales staff. So it's a selling expense under stationery. Fees from carpet laying. So this is part of our revenues. Remember we sell furniture and carpet. We also generate fees from laying carpet. So revenue. Other non-operating revenue. You might just have it at the top, sales, cash, sales, credit, carpet laying fees, or you could have it under a separate title, other operating revenues underneath your cogs if you like. Interest on bank deposits. Let's say we've got a lot of good money in the bank and the bank pays us some interest. So it's revenue. It's non-operating revenue called interest revenue. Money made from sale of old vehicle. So we're selling a non-current asset. We're getting money for it, so it's a revenue, but it's non-operating revenue. And it would be called profit from sale of non-current asset. Shop equipment is depreciated. It's a depreciation expense. It's shop equipment, so we're going to put it under selling. Depreciation, brackets, fixtures and fittings. Origin sends quarterly account. Origin is a provider of energy. You may not know that. Now you do. So they provide electricity and gas. In this case, it's electricity. It's an expense. It's general admin, and that will be under electricity expenses. John West buys cupboard for $2,000. Now we're not selling our fixtures and fittings, and perhaps John West, he's a customer. He wants to buy a cupboard to put all his tuna in it, and that cupboard is part of the general operating revenues. There it is under sales. Council rates to local government. So this is probably another quarterly bill. Whenever you own buildings, you'll pay rates to the local councils. You might like to call that council rates. We're just calling it. There we are, council rates. Loss on sale of a delivery vehicle. Now we're selling a non-current asset, but we're selling it for less than our book value, and we're making a loss on that. So under non-operating expenses, right down the bottom there, under your finance expenses, we'll have a loss on sale of non-current asset. Toilet accessories and staff restroom, just a general admin expense. There it is. Bad and doubtful debts. These ones are one of those finance expenses. There they are. Financial, bad and doubtful debts. Income from delivering furniture. So this is part of our revenues, other operating revenues, delivering fees. Furniture is acquired from manufacturer. So this is part of our COGS. It'll be a purchase. Damages paid out for lawsuit. We've got to pay some money out there. It's a non-operating expense, not part of our regular operations, and it's a legal cost. Leave loading for staff, general admin. Staff leave loading, part of your wages expense. Customers pay interest on credit. So if they've had that credit for a bit too long, we're going to charge them interest. We're going to generate some revenues. It's non-operating revenue, interest earned. The store is cleaned by a contractor. So if it was the office cleaned by a contractor, we might put it under admin. In this case, it's the store. It's the selling premise. And so we're going to put that under selling and under cleaning. Goods returned to you by customers. We make a sale, but something's wrong. So we're going to have a return on that sale. So under revenue, at the top there, we'll have a sales return. The computer, the office computer is fixed. Oh, good. General office admin. There it is, admin expense. IT expenses. We'll have some of those. And stamps. You may not know what they're for. They're for posting stuff. You may not do that too often anyway. General admin, postage. There it is, folks. There's your classification of all your transactions. It's important to know what they are, to recognize them, to classify them correctly so that you can put those classifications, those expenses, those transactions under their correct heading in the income statement. All the best.